So David's topic is JMMB's International Limited. JMMB International Limited has gained a securities dealer license in Barbados. David, tell us a little bit about that.
So we know JMMB Group Limited operates in Jamaica, the Dominican Republic, and Trinidad and Tobago. They've now officially gained a presence in Barbados, which is one of the major financial centers in the Caribbean, because you tend to find IBCs and a lot of businesses of significance incorporated there. So even the Sagicor Financial Company share that JMMB Group owns is held under JMMB International Limited. So this actual entry into Barbados, gives them that reach and presence across the region to offer services on a dynamic basis. Why did I say dynamic basis? So you would have seen whereby NCB Capital Markets, as a Cayman, Barbados, Trinidad, and Guyana branch, and having that kind of depth and reach across the region allows you to offer services in a variety of means, and also to build a further client base, which can actually tap back to your domestic capital markets for potential deals. So, it's a big deal for JMMB. I'm not sure that we're going to see any material jump or impact, within the next 6 months before JMB's financial year ends, but there's still a platform that they can build on going forward, to grow not just revenue, but also grow profits and diversify themselves a little bit further in the region. So that's, just where and the context of JMB International. And it comes against the backdrop of the fact that during the quarter, we would have seen, JMMB Group reporting a net loss, which, would have been impacted by Sagicor Financial Company's own net loss, because they report a share of Sagicor Financial Company's net loss, but also because of higher interest expense, which is because of high interest rates. So to grow this other area of business, which would be described as not interest income, would be a key part to, kind of stabilize them, or I should say stabilize JMMB Group in volatile times as different events go on.
Any comments from you on the preference share, David?
To be honest, it comes down to your cup of tea, because a lot of persons have asked me, does this offer make sense or anything else? And I just to people, the oversimplification is you're getting a required, or in this case, guaranteed dividend payment. And ordinary shares, a dividend is discretionary. Preference shares, in this case, one that is committed redeemable, or even debt, these arguments are required that have to be made before you get to ordinary shareholders. And in the same breath, the reality is the investable universe within Jamaica, and just in this current economic environment, is relatively limited. So why do I say limited? So we've seen where the JSE has had a significant decline this year across a variety of securities, and on the flip side, we might hear about certificate deposits, treasury bills, and some of these other options. But a caveat in one instance is that I can't remember if it's a treasury bill or the CD. One of them requires $1 million, other requires $5,000. Some persons, will go to their broker, and the broker will be like, we require $1 million to participate in this BOJ/GOJ offer. So to actually have the preference share offer is actually a way for persons to kind of get that relative fixed income like structure in their portfolio that isn't generally available to a small investor. So for example, we have JMMB Group Limited, which has 10 preference shares listed on the JSE. There is Apple Limited, which currently has 4 listed preference shares. We have PBS with 3. We have 138 Limited with 1. AS Redness is their own. And the funny thing is, I highlighted it to you, Jeremy, and highlighted other persons that, for example, with JMMB GL 7.5, 2021, it was paying 20%. 2022 was paying 5.34%, and in 2023 it's paying 9.3%. And while JMMB is potentially seeking to actually ask its preference shareholders to extend the tenure on the preference shares, and at the end of the day, JMMB still has to give a relatively attractive proposal to the preference shareholders for them to extend it. And the reality is, Sygnus' preference share of at 10.5% on the JMD side, it is, a contextual perspective, relatively good from what an average investor would have access to, because the only other preference share that's given a rate of that magnitude is PBS's 10.5% preference share. However, the tenure also matters. So whereas the Sygnus JMD, which is the Class C preference share, is only for 2 years, the PBS preference share that I'm referencing a while ago has a minimum period of 15 years for it actually can be redeemed. While you can access on a JSC these actual preference shares, you might not get that opportunity if liquidity is technically tight. And on the flip side with the USD, you're looking at even smaller universe if your options are only limited to Jamaica. So the offer really comes on to your preference as an investor, but also what is in your universe that you can actually earn potentially above that rate, or get a comparable rate or amount that would justify, that potential investment. So sometimes I've been seeing preferences at significant discounts on the JSC, and they're stepping them up. So while they might be given a lower fixed rate, this the difference between the price I paid versus the maturity price justifies the purchase.
Okay. So the way I see it, thanks David and Keisha, the way I see it, preference share, if you're looking for income consistently, then that's what you go with, because you're not, it's not a capital gains play, right? It's an income play. So as Keisha mentioned, the interest rate would be attractive, especially for those who want to kind of set it and leave it, right? Keisha, we know those type of investors that they want like low maintenance income. I think that's kind of where it fits, because it's just guaranteed and predictable in that sense. But yeah, there was questions that I think Jason Morris from Sygnus cleared up. So you're free to check out that interview for those who have questions around it. They did speak to, similar to what you said, Keisha, about them targeting, of course, returns that would be greater than the interest they're paying out, right? So they're looking for something above that, and they're sure that they're able to achieve that, and then so they're confident they'll be able to continue to grow. And they did mention that they have that capital that they're seeking to raise is still not going to be enough, so they're actually seeking outside capital as well, which says or hints to the fact that they have a good pipeline in terms of their perspective to continue to give returns both on the preference share side and to ordinary shareholders.